What if I told you that an algorithm might already know where Bitcoin is headed next before Wall Street reacts, before retail traders panic, before the news even breaks? What if the future price of Bitcoin isn't being guessed anymore, but calculated? And what if the biggest mistake you can make right now is ignoring what artificial intelligence is quietly revealing? Stay with me, because by the end of this video, you'll understand exactly how AI is being used to analyze Bitcoin, what actually works, what's pure hype, and how smart investors in the United States are positioning themselves right now. And before we go any further, if you want real, no-fluff breakdowns of money, markets, and technology that actually impact your future, hit that subscribe button right now and stay connected. Bitcoin has always been driven by emotion, fear, greed, panic, euphoria. But AI doesn't feel any of that. That's why hedge funds, Wall Street firms, and major financial institutions are quietly using artificial intelligence to analyze crypto markets, not to gamble, but to calculate probability. AI doesn't predict the future like a crystal ball. It identifies patterns humans can't see, and those patterns move markets. In the US, AI systems now process millions of data points every second. Price movements, trading volume, liquidity, interest rates, inflation data, ETF flows, whale activity, social sentiment, and even global macroeconomic signals. Humans can't do that in real time. AI can. That's the advantage. But here's the truth most people won't tell you. AI is not magic, and it absolutely does not guarantee profits. What it does is increase the odds. Machine learning models like neural networks and reinforcement learning systems are trained on years of Bitcoin data. Bull markets, crashes, sideways markets, and black swan events. They study how Bitcoin behaves around Federal Reserve announcements, inflation reports, interest rate changes, and major geopolitical news. In controlled US-based research environments, these models have shown they can predict short-term directional movement better than random chance, especially during stable or trending markets. And in finance, even a small statistical edge can mean everything. But here's where most people get it wrong. They think AI can tell them exactly when Bitcoin will hit $100,000 or crash tomorrow. That's not how it works. AI works on probability, not prophecy. And once you understand that, you stop gambling and start thinking like institutions. Stick with me here, because this part changes how you see the entire market. Real-world testing shows that AI models often reach accuracy levels between 55% and 65%. That might not sound impressive at first, but in trading, that's powerful. Because with proper risk management, a small edge repeated consistently can outperform emotional decision-making every time. That's why hedge funds don't chase perfect predictions. They chase consistency. And AI gives them that. Now let's talk about the predictions everyone's obsessed with. Different AI systems have produced different outlooks for Bitcoin's future. Some models suggest strong upside potential during the next major cycle. Others project periods of consolidation before another breakout. But here's what most headlines don't tell you. AI predictions update constantly. They change as new data comes in, inflation numbers, interest rate moves, ETF approvals, government policy, and market sentiment. So when someone says AI predicts Bitcoin will hit a certain price, what they really mean is, based on current data, this is one possible outcome. And that distinction matters. Because the market is alive, it evolves. Now let us talk about why the United States plays such a massive role in all of this. The US controls a huge portion of global capital flow. When American institutions move, the entire crypto market reacts. That's why AI models trained on U.S. economic data often perform better than generic global models. They monitor inflation trends, Federal Reserve decisions, bond yields, stock market correlations, and institutional inflows. When these signals align, AI can detect momentum shifts before the average trader even realizes something is happening. And that's where the edge comes from. But let's be clear, if AI could perfectly predict Bitcoin, everyone would already be rich. Markets adapt. Strategies stop working once everyone uses them. That's why AI is a tool, not a miracle. The people winning in crypto today aren't blindly following AI predictions. They're using AI as a decision support system. AI analyzes. Humans decide. That combination is powerful. And that's why many retail traders fail, not because AI is wrong, but because they don't understand what the signals actually mean. So what does this mean for you? If you're in the US and paying attention to Bitcoin, AI can help you understand trends, manage risk, and avoid emotional mistakes. But it can't eliminate risk. It can't predict black swan events. And it can't replace discipline. That part is still on you. And now, here's the real takeaway. Bitcoin isn't just a speculative asset anymore. It's a global financial instrument being analyzed by algorithms. 24/7's AI isn't predicting the future, it's mapping probabilities. And the people who learn to read those probabilities will always be ahead of the crowd. The real question isn't whether AI can predict Bitcoin. The real question is whether you're using the same tools as the smart money. Because the next major move in Bitcoin won't be announced on social media. It won't trend on TikTok. And it won't wait for retail traders to catch up. Will happen quietly inside data models, algorithms, and AI systems long before headlines react. And when it does, you'll either understand why, or you'll be asking how you missed it. If you want to stay ahead instead of behind, make sure you subscribe right now and stay connected with this channel. Because the future of money isn't coming. It's already here.